Welcome back to the quarterly call. All content is for informational purposes and is not investment advice.
Mhm.
Please consult with an investment professional. Okay, so today we're diving into something that really made waves recently. That was the Meta Platform's Q2 2025 earnings call. And look, this wasn't just your standard financial update.
No, not at all.
It felt much bigger, like a statement of intent about their strategic direction, especially this huge, almost sci-fi push towards artificial intelligence, specifically what they're now calling, quite confidently, superintelligence.
Mhm.
It's getting really clear AI isn't some future thing for them, it's now. It's reshaping their products, driving these, well, massive investments.
Absolutely massive.
So our job today is really to unpack the most impactful parts of that call, to try and understand where Meta's actually heading, and what that means for tech, maybe even for us.
Exactly. And you're right. While the headline numbers, the financials, they always get attention. What really jumped out and what we need to explore are those forward-looking statements. This call, it was July 30th, 2025, right?
That's right, very recent.
It wasn't just looking back. It was, like you said, almost a manifesto, laying out these fundamental strategic shifts that are driving the billions they're investing and this, well, incredibly ambitious future plan.
Right.
He gives us a rare chance to see not just what they're doing, but why. And the scale of that commitment to AI, it's pretty staggering. Speaks volumes about their long-term conviction. Hashtag Take AI. A glimpse at the Q2 2025 financial landscape.
Okay, so with that huge vision, superintelligence for everyone, the big question is how does that square with the current books? How's the financial health looking right now? Let's peel back the layers on Q2 2025. They reported total revenue of $47.5 billion.
Strong number.
Yeah, really solid. That's up 22% year over year. And what's interesting is that holds whether you look at reported or constant currency. So FX wasn't really masking anything there, just strong top-line growth.
Good sign.
Now, the expense side. Total expenses hit $27.1 billion. That's up 12% year over year. And the breakdown here is quite telling, I think. It hints at the priorities.
Right. Where the money's actually going.
Exactly. Cost of revenue was up 16%, a lot of that. Higher infrastructure costs, servers, networks, power, all the stuff needed for their platforms, and definitely these AI models.
The backbone.
Right. And payments to partners, too. But interestingly, they mentioned that this was partly offset because they extended the useful life of their servers.
Ah, the accounting lever.
Yeah, basically saying the hardware lasts longer, so they spread the depreciation costs out. Gives them a bit of breathing room for immediate investments, maybe.
Deliver timing, perhaps.
Then R&D, research and development, that saw a big jump, 23% increase.
That's significant.
Yeah, not a small bump. Seems very deliberate. Mostly driven by higher employee compensation. Those AI engineers aren't cheap. And again, infrastructure for building out AI compute.
Talent and tools.
Marketing and sales up 9%.
Now,
Mostly professional services for platform integrity work and general marketing. Though that was offset a bit by lower employee costs from, earlier cuts.
right, the restructuring impact.
And G&A, general and administrative, actually went down pretty notably 27%, mainly because legal costs were lower this time around.
Fewer big lawsuits settling, perhaps.
Could be.
Right.
So all that boils down to a really strong operating income, $20.4 billion. That gives them a 43% operating margin. Impressive.
Very healthy margin.
And net income, $18.3 billion, or 7.14 cents per share. So, financially speaking, Q2 was a very good quarter for Meta.
It really was. But what's really insightful when you look at those expenses, especially the big jumps in R&D and infrastructure,
Yeah.
those are the foundations, right? The planks for Meta's future. These aren't just like routine operating costs. They're very deliberate, strategic bets backing this whole AI narrative we're going to talk more about.
So the spending is the strategy, in a way.
Pretty much. Pouring billions into R&D and infrastructure now isn't just about small improvements. It's like they're betting the farm on a future where AI is, the operating system for the entire company.
Wow. That's a big statement.
Yeah, this level of upfront investment, it signals a huge shift, maybe irreversible. They're laying the groundwork, and the numbers definitely show that commitment.
Okay. And what about people? Headcount.
Right, headcount. They finished Q2 with just over 75,900 employees. That was actually down 1% from the previous quarter.
Oh, interesting. Still cutting?
Well, it's mainly the tail end of those performance cuts and restructuring they did earlier, so those people just weren't on the books anymore. But, and this is key, that overall drop was partly offset because they kept hiring. But hiring in very specific strategic spots.
Like where?
Core areas, obviously monetization, infrastructure, reality labs, but critically, also AI. and regulation and compliance, which tells you something too.
Right. Got to navigate that landscape.
Exactly. So the total number might dip, but they're actively restaffing for their biggest priorities, training out maybe less critical roles for AI talent and future growth folks. It's a strategic shuffle.
Makes sense. And capital allocation, where did the big money go?
Yeah, CapEx was huge. $17 billion in capital expenditures in just the quarter.
17 billion.
Yep. Mostly servers, data centers, network gear, the absolute nuts and bolts needed for their AI ambitions. But even with that spending, they still generated $8.5 billion in free cash flow.
Still throwing off cash.
Yeah, the core business is profitable. They also kept buying back stock, $9.8 billion of Class A shares. Helps offset dilution from employee stock, and paid out $1.3 billion in dividend.
Keeping shareholders reasonably happy then.
Trying to balance it. Oh, and one other point, that $15.1 billion in non-marketable equity investments, that includes their stake in Scale AI.
Ah, the data labeling company.
Right, so it shows they're not just building everything in-house, they're also investing strategically in the wider AI ecosystem. A bit of hedging, maybe, or just smart partnerships.
That context is really helpful, building and investing. So how is all this AI focus actually showing up in the performance of the main business, the family of apps, FOA?
Right, the engine room.
Yeah, it's still just massive. Over 3.4 billion people using at least one of their apps daily in June.
Mind-boggling number.
It really is more than a third of the planet every day. That's the base they're working with for ads and AI deployment.
Unparalleled reach.
FOA revenue was strong too, $47.1 billion, up 22% year over year. And inside that, ad revenue, still the giant, was $46.6 billion, up 21%.
Still growing at that scale.
And they specifically called out online commerce as the biggest driver of that growth. So digital shopping is definitely strong.
Good indicator for the broader economy too, perhaps.
Maybe. Geographically, growth was pretty broad. Strongest in Europe, up 24%, and rest of world, 23%. North America, 21%. Asia Pacific, 18%. So healthy everywhere. Now, breaking down the ad revenue. Impressions, the number of ads shown, were up 11%, mostly driven by Asia Pacific, but they saw acceleration everywhere. They put this down to engagement tailwinds on Facebook and Instagram.
Meaning people are spending more time.
Yeah, basically. More time scrolling, more chances to show ads, and also some ad load optimizations on Facebook played a smaller part. But critically, the average price per ad went up too, by 9%.
Ah, so more ads and more expensive ads.
Right. Benefiting from advertiser demand, they said, but also, importantly, improved ad performance, which you have to assume is where the AI comes in, right?
Absolutely, making the ads more relevant, more effective.
And beyond ads, that other FOA revenue line item was $583 million. That's up 50% year over year.
50%. What's driving that?
Primarily WhatsApp paid messaging revenue and Meta-verified subscriptions.
Okay, so those new initiatives are starting to contribute meaningfully.
Seems like it. It's an interesting sign of diversification within FOA, moving beyond just ads.
Yeah, that's the really key takeaway with FOA, I think. That synergy you mentioned. The engagement boost isn't separate from the ad performance. They're linked by AI.
So.
Well, better AI in the recommendation systems makes the content more engaging, right? People stay longer.
Okay.
That creates more opportunities, more slots to show relevant ads, so more impressions. And then separate AI improvements make the ads themselves perform better, driving up the price advertisers are willing to pay.
Ah, it's a virtuous cycle.
Exactly. Better AI, more engagement, more impressions, better ad performance, higher prices.
Yeah.
And yeah, the success of WhatsApp messaging and Meta-verified, even if small now, is significant strategically. It shows they're serious about finding new ways to make money from that huge user base. Diversification is key long-term.
Right. Okay, so that's the main engine. What about Reality Labs, RL, the moonshot division?
Yeah, the longer-term, maybe higher-risk bets. Revenue there was $370 million, up just 5% year over year.
Not huge growth.
No. And that increase was specifically driven by higher sales of AI glasses, which is interesting. We'll come back to that, but offset by lower Quest headset sales.
Okay, so glasses up, headsets down, netted out small growth.
Pretty much. But the expenses in RL are still massive. $4.9 billion, up only 1% year over year, but still huge. Mostly non-headcount R&D, like tech development for future stuff.
So the operating loss must still be pretty big.
Oh yeah, $4.5 billion loss for the quarter in RL.
Wow, that's a lot of money to lose.
It is, and critics always point to it. But the detail about increased AI glasses sales within RL is telling. It's strategically important. It points to a specific growth area that lines up perfectly with their bigger AI vision.
So it hints at AI wearables being a key part of the plan.
Exactly.
Yeah.
We'll definitely talk more about that. It suggests that even with the big loss, there's focused progress happening that directly supports the long-term superintelligence goal. And, the Quest ecosystem is still growing too. They launched that MetaQuest 3S Xbox edition, saw record interest in cloud gaming.
Expanding use cases beyond just VR games.
Right. Media, web browsing, trying to make it more of a general platform.
Okay, this is where the conversation really shifted, I thought. Beyond the numbers into something else. Meta's Q2 call wasn't just reporting, it felt like this bold statement about their ultimate goal.
Yeah, it was quite something.
They made this really audacious claim. They said they're seeing glimpses of our AI systems improving themselves, which is wow.
Yeah.
And because of that, they believe superintelligence, which they defined as AI surpassing human intelligence in every single way, they think it's now in sight.
That's the headline, isn't it? Insight.
Yeah. It's not just hyperbole. It feels like a genuine belief that the timeline is accelerating, pushing boundaries.
Right.
So their core vision flowing from that is incredibly ambitious. Bring personal superintelligence to everyone. The idea is to empower individuals. Let us direct this super smart AI towards what we value.
Like a truly personal assistant, but supercharged.
Exactly. An AI that gets you, helps you achieve things, augments your abilities. They think this could start a whole new era of individual empowerment, fostering creativity, enriching culture, communities, connection, leading to more fulfilling lives.
It's a very human-centric framing of it.
It is, not just economic gains, but a fundamental shift in human capability almost. Personal agency amplified.
And that definition of superintelligence surpassing human intelligence in every way that's crucial, it sets the bar incredibly high.
Beyond human level.
Way beyond. And their historical take is interesting, too. They think if history is a guide, the biggest impact won't just be science or economics, but empowering people.
Amplifying us, not replacing us.
That seems to be the pitch. Augmenting lives, creativity, connection, framing AI as a partner, a universal assistant, not a competitor.
Okay, so how are they actually planning to build this? They set up a new lab?
Yeah, Meta Superintelligence Labs. It's not just one lab, though. It sounds like a whole initiative covering foundational research, product development, and, yeah, a dedicated new lab for the next-gen models.
And the leadership team they pulled together.
Very high profile. Alexandra Wang leading overall, Nat Friedman on AI products and applied research, Shengjie Zhao as chief scientist for this new frontier effort. It's basically an AI dream team.
Signaling serious intent.
Absolutely. Assembling that kind of elite, talent-dense group shows they're dead serious. And they're making progress already, they say. Improving Llama 4.1, 4.2,
Yeah.
but also working in parallel on the next big thing, the frontier models coming in the next year or so.
So improving current stuff while also aiming for the breakthrough.
Exactly. A layered approach. Continuous improvement in the big swings.
And to power all this, you need insane amounts of computing power, right?
Off the charts. And that's their big hook, what they call unparalleled compute access.
That's the magnet for the talent you mentioned?
Precisely. Top AI researchers, they're limited by compute. They want the biggest sandbox, the most powerful tools. Meta is clearly providing that.
And they're building even more. I heard some crazy names.
Yeah, the future clusters are mind-blowing. Prometheus coming online next year. Projected to be the world's first gigawatt-plus cluster.
A gigawatt. What does that even mean in compute terms?
Think powering a whole city like San Francisco continuously. It's building an engine on a scale almost no one else can match, powering the next AI breakthroughs.
It's just Prometheus.
Moop. Then there's Hyperion scalable up to 5 gigawatts over several years.
5.
And multiple more Titan clusters in development, too. These aren't small upgrades. They're exponential leaps in capacity.
It really underscores that conviction, doesn't it? That superintelligence will touch every part of their business.
It has to. You don't spend like this unless you believe it's utterly transformative. And the strategic thinking behind spending these billions on compute, it comes back to that core belief. AI progress is happening faster than expected.
The aggressive predictions are proving right.
Consistently, they say. So to lead, not just follow, they have to make equally aggressive, almost preemptive investments in the foundations. Build for the future that's arriving ahead of schedule.
And Meta's unique position here is what? Beyond just having the money.
It's their ability to take the newest AI, the cutting-edge models, and instantly deploy it to billions of people across all their apps, their ad systems.
The distribution network.
Exactly. Most AI players might build a great model, but they don't have that immediate global reach. Meta can iterate, get feedback from billions of interactions, scale new stuff incredibly fast. That feedback loop is unbelievably powerful for AI development.
Learning from the real world at scale.
Right. And another critical piece they highlighted is self-improvement in AI,
Yeah.
developing systems that learn beyond human input, go beyond the training data.
Like the AI improving Facebook algorithms you mentioned.
Exactly. Imagine AI identifying its own flaws and rewriting itself to be better. That's the leap they're seeing from tools to emergent intelligence.
Wow.
And that informs how they organize, too, shifting to those small, talent-dense teams for the frontier research.
Why small teams for the big breakthroughs?
The idea, the physics of team size, they called it, is that for truly novel work, the smallest group that can hold the entire complex system in their heads is the most effective, more agile, more focused. It's a fascinating contrast to the huge teams needed for existing scaled ML systems.
Okay, so this grand vision, this massive investment, what does it mean for the business today, for users? They laid out 5 key areas, right, where AI is driving impact now.
Yeah, 5 strategic opportunities. It's not just theory, it's happening.
First one, maybe the most obvious, improved advertising.
The cash cow.
Right. AI is unlocking big efficiency gains there. They rolled out a new AI recommendation model for ads onto new places like Reels and improved it using more signals, longer user context.
And results.
Tangible. Roughly 5% more ad conversions on Instagram, 3% more on Facebook. That's real money for advertisers and for Meta.
Direct bottom line impact.
And they're also seeing good progress with generative AI for ad creative, making images, videos, text variations.
Helping advertisers make ads more easily.
Exactly. They said a meaningful percent of ad revenue now comes from campaigns using these Gen AI features, especially valuable for smaller businesses, right? Limited budgets, limited creative teams.
Democratizing ad creation a bit.
Yeah. Though they noted big brands still work with agencies, but the AI tools help agencies be maybe more strategic, more efficient.
Makes sense. Can you give us a bit more detail on the tech behind those ad improvements? You mentioned specific models.
Sure. It gets a bit technical, but it's interesting. First, there's Andromeda. That's for the retrieval stage, picking relevant ads from the millions available. Improvements there boosted conversions nearly 4% on Facebook mobile feed and Reels. Just better selection, finding the right needles in the haystack.
Exactly. Then there's the Generative Ads Recommendation System, or GEM. That's the critical ranking stage. They improve that by scaling up training and feeding it richer data from Instagram organic posts, ad interactions, everything.
More data, better predictions.
Plus, they're using advanced sequence modeling. Think of it like the AI remembering not just your last few clicks, but a much longer history of your actions online.
Like remembering chapters, not just sentences.
Good analogy. That much deeper memory gives a way more accurate understanding of what you might like next. That combo drove the 5% conversion lift on Instagram, 3% on Facebook feed and Reels.
Impressive. And Lattice.
Lattice model architecture. That's a whole new design that lets them run much bigger, more general models that replace lots of smaller, specialized ones. Deploying that to earlier ranking stages boosted capacity, efficiency, and performance, nearly 4% more conversions across Facebook feed and Reels. It's like an AI efficiency revolution.
Wow, okay. What about the tools for advertisers? Advantage Plus Wove.
Yeah, the Advantage Plus suite is gaining steam. They rolled out a streamlined campaign setup flow, making it easier for advertisers to use the AI tools from the start, seeing good adoption lifts.
And the creative tools within that.
The Advantage plus Creative Suite Gen AI stuff like video generation, image animation, video expansion, nearly 2 million advertisers are using those now.
2 million. That's significant adoption.
It is. They're also testing AI translation for ad captions in 10 languages, promising results. And image expansion is popular with smaller businesses.
Makes sense if you only have one photo.
Right. And business messaging is strong too, especially in the U.S. Click-to-message revenue up over 40% year over year in Q2. Helped a lot by those website-to-message ads that bridged the gap.
Seamless journey.
And finally, platform evolution. They rolled out incremental attribution globally, helps advertisers see which conversions only happen because of the ad. Clear ROI.
That's important.
And omni-channel ads, also global now, optimizing for sales both online and in physical stores, seeing like a median 15% reduction in cost per purchase in tests. Big deal for retailers.
Okay, that's a deep dive on ads. What were the second and third opportunities? More user focused.
Yeah, second is more engaging experiences.
Yeah.
Basically, using AI to show people better stuff, keep them around longer.
The engagement tailwinds you mentioned.
Exactly. Those recommendation system advances drove a 5% increase in time spent on Facebook, 6% on Instagram just this quarter.
Those are big gains for mature
We
platforms.
really are. And beyond just showing content, they're starting with AI video editing tools in Meta AI, this new Edits app, hinting at AI helping with creation too.
Interesting. Okay, and the third.
Business messaging. This is a big belief for them. Every business will soon have its own AI, like having email or a website today.
An AI front desk for every shop.
Kind of. Imagine the coffee shop AI answering questions, taking orders via Messenger or WhatsApp. They're seeing product market fit. In test countries, people are actually using it.
So it's not just theoretical.
Apparently not. And they're integrating these business AIs into ads onto websites, making AI part of the whole customer journey, transforming customer service and sales. And that engagement growth, it's broad. Daily actives up across Facebook, Instagram, WhatsApp, driven by those recommendation improvements. Video is huge. Instagram video time up over 20% globally. Facebook US video time also up over 20%.
Just incredible video growth.
Yeah, the ranking systems are just getting better at finding the right videos for you. A big focus now is promoting original content, especially from smaller creators.
Leveling the playing field a bit.
That seems to be the goal. Over 2/3 of recommended content on Instagram in the US is now original posts, and they want to boost the freshness of that original content, get it seen quickly.
Important for new creators.
Vital. Longer term, they're working on foundational models for cross-surface recommendations. One AI, understanding you across Facebook, Insta, Threads,
A unified profile.
sort of, and more large language models, LLMs, in recommendations. Already working well in Threads, driving time spent gains, now exploring it for other apps. Oh, and using Llama internally too, like for handling bug reports, led to a 30% drop in certain bug reports in the US, Canada.
AI fixing the platform itself.
Pretty much. Shows the efficiency gains. On business messaging, yeah, WhatsApp paid messaging revenue is growing nicely. They're rolling out ads slowly in Threads feed and WhatsApp status channels, updates tab.
Ads in WhatsApp, that's new.
Yeah, but they stressed it'll be very gradual, low supply initially. And the ad prices will likely be lower than Facebook, Instagram for a while. Different markets, less targeting data.
Right.
So don't expect it to be a huge revenue driver soon, but it's a crucial long-term monetization play.
Okay, AI is everywhere. What were the fourth and fifth opportunities? Getting more direct AI interaction devices.
Exactly. Fourth is Meta AI itself, the assistant. It's reached over 1 billion monthly active users already.
1 billion. Wow.
Yeah, impressive reach. The focus now is deepening the experience, making it the go-to personal AI. They see engagement climbing as the models get better. People use it more when it's more useful.
Makes sense. Where are people using it most?
WhatsApp is the biggest driver for queries. Practical stuff, information, homework help, generating images, becoming an everyday tool. On Facebook, people are starting to ask it about posts in their feed, using it for search.
Integrating into the core experience.
Right, and the future vision includes automatic translation and dubbing of foreign language content. Imagine that, breaking down language barriers in real time.
Game changer for global connection.
Potentially. And finally, the fifth opportunity, AI devices. Real momentum here and a huge part of the future vision.
The glasses.
Yeah, the Ray-Ban Meta glasses are doing really well. Sales accelerating, demand outstripping supply. They also launched new Oakley Meta HSTN's performance AI glasses, longer battery, better camera, aimed at sports.
Different styles for different folks.
Exactly. And crucially, Meta AI usage on the glasses is increasing, and retention is improving. People are sticking with it. They're not just gadgets people try once.
That's a very positive signal for wearables.
And strategically, AI devices are seen as transformative. Meta literally called glasses the main way. Superintelligence will integrate into daily life. A ubiquitous personal assistant?
Because it sees what you see, hears what you hear.
Precisely. That real-world context is key. Add a display, holographic or simpler, and it can show you info right in your view. Augmented reality.
They made that analogy to vision correction.
Yeah, suggesting that not having AI glasses in the future could be a significant cognitive disadvantage. Like trying to read without your reading glasses today, implying they'll become essential.
Bold claim.
Very. And it ties directly into the metaverse vision blending physical and digital. They noted this quirk that strong AI is arriving before perfect holograms. But because they invested in Reality Labs for years, they feel they're way ahead on building the actual glasses hardware.
So the AI is ready and they have the form factor lead.
That's the argument. Glasses are fundamental for the future, and they're positioned well. It's a long game, but they're clearly all in.
And it all connects back, right? These 5 pillars.
Absolutely. The ad improvements fund everything. Drive engagement. Engagement creates space for meta AI and business messaging. And the devices provide the ultimate interface. It's all interconnected, driven by that core superintelligence goal.
Okay, that lays out the strategy and the current state really well. But what about looking forward? The financial guidance they gave definitely signaled, well, more spending, right? A
Yeah.
lot more.
Oh, yeah. The investment phase is definitely continuing, even accelerating.
For Q3 2025, they're guiding revenue between $47.5 billion and $50.5 billion. They also noted about a 1% tailwind from foreign currency, helping things slightly.
Solid range.
But for Q4, while no exact number, they expect slower year-over-year growth in Q3, mainly because Q4 last year was particularly strong. Tougher comparison.
Standard challenge for high growth phases. Lapping strong comps.
Right. But the expense and CapEx outlook,
Hmm.
that's where it gets really eye-opening.
Yeah, paints a very clear picture of the AI investment ramp. Full year 2025 total expenses narrowed to $114 to $118 billion. That's 24% growth year over year.
Already huge growth.
But then for 2026, they explicitly said they expect the total expense growth rate to be above the 2025 rate.
So spending growth is accelerating next year.
That's the guidance, the biggest driver. Infrastructure costs.
All those data centers coming online?
Exactly. You get a sharp jump in depreciation expense from all the servers and buildings bought and put into service in 2026, plus the full-year depreciation impact from the stuff deployed in 2025.
Double whammy of depreciation.
Right. And on top of that, much higher operating costs for that bigger footprint. Massive energy bills, leases, maintenance, maybe cloud services for some things, network costs. It all adds up fast.
Okay, infrastructure is number one. What's number two?
Employee compensation. Still hiring expensive tech talent, especially for AI. Plus, you get the full-year cost impact in 2026 for everyone they hired throughout 2025.
Still investing heavily in people.
Unwavering commitment there, it seems. Cost no object for the right AI talent.
And the CapEx itself, the direct spending on building this stuff.
Astonishing numbers. For 2025, narrowed to $66 to $72 billion. That's up roughly $30 billion year over year at the midpoint.
$30 billion increase in 1 year.
Just staggering. And for 2026, they expect similarly significant CapEx dollar growth.
So potentially another $30 billion or so on top of the 2025 level.
That's what similarly significant implies. They're aggressively chasing capacity for AI in the business. It signals a multi-year period of exceptionally high capital spending, reshaping the whole company financially.
It really does sound like building a new digital continent, like you said. Okay, beyond those direct numbers, what about the broader environment? Taxes, regulations?
Yeah, they touched on that. Tax-wise, maybe a slight positive. New U.S. tax law is expected to lower their federal cash taxes a bit this year and going forward. The overall 2025 tax rate will likely be higher than Q2's, but they couldn't quantify it yet.
Okay, small tailwind there maybe. But regulations, especially Europe, that sounded concerning.
Very concerning. Increasing legal and regulatory headwinds in the EU. They specifically mentioned their less personalized ads or LPA offering.
That was their response to the DMA, the Digital Markets Act.
Exactly. Introduced last November based on EU Commission feedback. But the worry now is that the Commission might come back with more feedback on LPA, requiring further changes.
Changes that could hurt the business.
Potentially significantly. They warned it could lead to a materially worse user and advertiser experience and have a significant negative impact on European revenue, possibly as soon as later this quarter.
Wow, that's immediate risk.
Yeah. They've appealed the DMA decision, but changes could still be forced on them while the appeal is ongoing. It's major uncertainty in a huge market. Not just a small legal issue, it's a structural challenge to their core ad model there. And taken together, this outlook, the massive spending, the regulatory risks, it all hammers home Meta's core message. These investments aren't just costs.
They're foundational.
Exactly. Foundational commitments for future gains, for unlocking new AI opportunities. They're betting big, understanding that dominance in the AI era requires unprecedented scale now.
So the capital allocation strategy is just reinvest everything?
Pretty much. Primary focus is reinvesting in the business. Infrastructure and talent are top priorities. So even though the core business generates tons of cash, a huge chunk is being plowed right back into building that AI future.
Can they fund all this themselves? That CapEx is enormous.
They expect to self-finance a large share. But they are exploring working with financial partners to co-develop data centers.
Bringing in outside money?
Potentially. No deals done yet, but they seem to think these huge projects will attract external financing. Gives them flexibility if requirements change, or AI moves even faster.
What about the ROI on all this spending? Are they seeing returns yet?
On the core AI investments ads, organic engagement, they say yes. Strong, measurable ROI already. Clear performance improvements.
But the Gen AI stuff, superintelligence.
Much earlier on the return curve. Not expected to be a meaningful revenue driver this year or next. But, they stressed, high optimism for the medium to long term across those 5 pillars. It's a long game. Patience and conviction.
And the infrastructure is flexible, not locked into one thing.
Yeah, they emphasize fungibility. The compute they're building isn't for just one specific AI project. It's adaptable, like a giant brain they can reconfigure. Reduces the risk of building billions in specialized hardware that becomes obsolete. Smart.
Okay. And shareholder returns, buybacks, dividends.
It's still happening. Share-based compensation, SBC, is a big expense driver, especially for 2026. But they're focused on minimizing dilution through buybacks, using their strong finances to offset the new shares issued to employees, and continuing the quarterly dividend. Balancing investment with returns. #V. Critical questions and deeper insights.
That paints a very clear picture of the road ahead, intense investment, massive scale. But this whole superintelligence focus, it raises some really fundamental questions, doesn't it? Beyond the financials.
Absolutely. Deeper questions about AI itself, our future.
Let's get into some of those that came up on the call. First, this idea of the pace of AI progress and self-improvement. What do they say they've learned just in the last, say, 3 to 6 months? What's surprising them?
Well, the recurring theme, almost unsettlingly, is that the aggressive assumptions, the fastest assumptions about AI progress, they keep proving to be the most accurate.
So the optimistic, maybe even sci-fi predictions are happening.
More often than not, it seems. And they gave that internal example. Llama 4 is already adapting, building autonomous AI agents that improve Facebook algorithms, boosting quality, engagement.
The AI improving itself.
Yeah, it's low volume now, not widespread, but they called it fairly profound. An AI identifying a problem with itself, then developing and deploying a fix. That's a massive leap.
Changes everything.
It really points towards that self-accelerating progress and reinforces their conviction that the world will look pretty different in a few years. AI shaping everything sooner, not later.
And that belief drives the talent hunt, the compute build.
Absolutely. You need the absolute best and most elite talent-dense team. And you need the leading compute fleet, so those researchers have more power per person than anywhere else. They see that combo, top talent, top compute, plus their massive distribution as their unique advantage. Take breakthroughs, roll them out to billions, get feedback, iterate. Fast.
That self-improvement idea is mind-bending. Okay, what about the core platforms? Future of engagement on Facebook, Instagram. With all this AI, what's next for keeping people scrolling? Where's the next lift coming from?
They have a pretty detailed roadmap for recommendations. Shorter term. Making recommendations adapt better to your current session, what you're interested in right now.
More real-time personalization.
That's exactly.
Yeah.
Also helping content from smaller creators break out faster, matching it to niche audiences. Discovering more diverse interests for people, maybe using explicit feedback too, and just scaling up models, using advanced techniques for better quality overall.
And longer-term bets.
Foundational models that work across services, Facebook, Insta, WhatsApp, one system learning about you, deeper integration of LLMs into recommendations, building on the success in threads, and a big focus on system efficiency scaling capacity without costs exploding or ROI dropping.
Can't just throw infinite compute at it.
Right. Got to be smart about it. And remember, the internal use llama fixing bug reports, boosting efficiency behind the scenes too.
Okay, AI is clearly the core, which brings up that recurring question. Open source AI, how has their thinking changed? Especially now they're chasing superintelligence and spending billions on infrastructure. Does it get riskier to share?
Their official stance is still committed to open source, sharing leading models. But with caveats, they don't share everything.
What are the deciding factors?
2 trends they mentioned. 1, models are getting so huge, maybe only giant companies or well-funded labs can actually use the biggest open source ones anyway. Does sharing really benefit the broad community then? Or just competitors?
Good question.
2nd, and more critical, safety concerns increase as superintelligence gets closer. They have to take that very seriously. So it's a balancing act. Benefits of sharing, accelerating progress globally versus competitive risks and fundamental safety.
So still leading in open source, but maybe more selective.
That's the sense. Pragmatic, evolving, not all or nothing, especially as capabilities get more profound.
Makes sense. Balancing openness and responsibility. Okay, finally, let's circle back to those AI devices, the glasses. What's the grand vision there? Could they really replace smartphones one day?
The excitement around glasses is really palpable in how they talk about it. Ray-Ban Metas, the Oakley HSTNs, both doing well. Sales accelerating, AI usage growing and sticking.
People are actually using the AI features long term.
Yeah, it's not just novelty. They see glasses as the ideal form factor for AI because of that real-world context, seeing what you see, hearing what you hear, at a display, even a simple one initially, and it unlocks augmented reality info in your view.
The cognitive disadvantage idea again?
Right, implying they'll become essential.
Yeah.
And it directly accelerates the metaverse vision, blending physical and digital. They acknowledge that strong AI is arriving before perfect holograms, but their years of Reality Labs work gives them a head start on the glasses hardware itself.
So they feel they're positioned for this future form factor.
Very much so. It's not a side project. It's fundamental to where they see computing going. A long-term bet, but one they're uniquely placed to pursue, thanks to those earlier costly investments. Hashtag, shamtag, outro.
Wow. What an exploration of that meta earnings call. It really feels like we covered a lot of ground. The sheer scale of the AI investment, the superintelligence goal, how it's already driving the current business, especially ads and engagement, and that incredibly ambitious strategic outlook for products, finances, everything.
Yeah.
It's just so clear that goal, personal superintelligence for everyone, isn't just talk. It's shaping every single decision, from data center concrete to ad algorithms.
It really is, and it does make you stop and think, doesn't it, about the longer-term implications.
Yeah.
AI systems improving themselves potentially exponentially fast, widely available superintelligence. What does that actually mean for us?
For our lives, work, creativity.
Exactly. How we connect, how we understand the world, even ourselves. As these companies pour billions into building ever smarter AI, you have to wonder, how will this relentless pace keep reshaping our daily lives, our interactions, maybe even our definition of human potential?
A huge question to ponder. Really makes you think.
Definitely food for thought.
Thank you so much for tuning in to the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.